Hey everyone, welcome back to the show. We've been hearing a lot about tariffs lately in the news.
Yeah, it's definitely been a hot topic.
So we decided to do a little deep dive into how these tariffs might actually impact the stock market. We're going to take a look at some insights from Goldman Sachs and explore who might come out on top and who might, well, not be so lucky.
Yeah, and what's really interesting to me is how it's not just about economics, right? It's almost like a global game of chess.
I like that, a global game of chess, because, decisions made in one country can trigger this chain reaction across the world,
Mhm.
impacting trade relationships and ultimately, yeah, your investment portfolio.
Exactly.
So let's break it down. We're talking about President Trump, right? He's imposed this 25% tariff on goods coming from Mexico and Canada,
Yeah,
a 10% tariff on goods from China,
right.
and there's even talk of potential future tariffs on the European Union. What's the strategy here?
Well, President Trump has said that these tariffs are meant to reduce those trade deficits and protect American industries.
Okay.
Some analysts even suggest that there could be a political strategy at play here, especially as we head into those elections.
Yeah, that makes
But the real question is, how are these tariffs actually going to play out in the market?
right, because we've all heard those warnings, right? Goldman Sachs, for instance, is predicting a potential 5% drop in the S&P 500.
Yeah.
That's not small potatoes.
That is definitely significant, and their analysis is built on two key factors. First, they estimate that these tariffs could cut S&P 500 earnings per share by 2 to 3%.
Okay, so what does that mean exactly? Earnings per share. Break it down for us.
Sure. So for every dollar that a company makes, a portion of that is their profit, right?
Yeah.
And that profit gets divided amongst all the shares of stock that are out there. Earnings per share is essentially a company's report card for investors.
Mm-hmm.
And tariffs could potentially give those report cards a failing grade.
Oh, okay. So lower earnings per share equals bad news for investors.
Yeah.
But what's that second factor that Goldman Sachs is worried about?
The second factor is all about economic uncertainty.
Okay.
And that could actually drag down those valuation multiples by another 3%. So think of it this way. When investors are feeling uncertain about the future, they're less willing to pay top dollar for a company, even if that company has decent earnings.
Right.
Tariffs kind of create this cloud of uncertainty, making investors a little bit hesitant.
So it's this double whammy, right? Lower earnings and lower valuations.
Yeah.
That's got to make some companies sweat.
Yeah,
But I imagine not every company will be hit equally hard by these tariffs, right?
definitely not.
So who are the likely casualties in this whole tariff war? Who should we be worried about?
Well, one industry that's staring down the barrel of this is automakers.
Mm,
Companies like Ford and GM, they rely heavily on imported parts, right?
right.
Higher tariffs mean that their production costs have suddenly gone up, and that squeezes their profits.
Oh.
And we haven't even factored in potential disruptions to those supply chains.
Oh, right. Like if those parts are suddenly delayed or unavailable, it could really bring production to a halt.
Exactly.
Oof, not a pretty picture. What about tech companies? They're all about those global supply chains, right?
Absolutely. Look at companies like Apple or NXP Semiconductors. They use components from all over the world.
Yeah.
And those components just became more expensive because of the tariffs. So now these tech companies face a tough choice. They can either absorb that cost themselves, which hurts their profit margins, or they can try to pass those costs on to consumers by raising prices.
Which could then lead to lower sales. It's a tough spot to be in for sure. What about retailers? I imagine they're also feeling the squeeze from these tariffs.
Retailers, especially those giants like Amazon and Walmart, are caught in a really tricky situation.
Okay, how so?
They're dealing with higher costs from their suppliers,
Mm.
right? But on the other side, they're also facing the possibility of weaker consumer spending if those prices climb too high.
Yeah, people might start tightening their belts and cutting back on that online shopping. So it sounds like there are a lot of potential downsides to these tariffs.
Yeah.
But here's where things get interesting.
Yeah.
Some companies might actually benefit from these tariffs.
That's right. Not everyone loses.
So who are these unlikely winners?
Well, domestic manufacturers, for one.
Yeah.
As those imported goods become more expensive, companies that are making things right here in the U.S., they suddenly have a competitive edge.
Oh, I see. Less competition from those pricier imports.
Exactly. So they face less competition, which could mean higher sales and a boost to their profits.
Interesting. And what about industries that are closely tied to government spending, like defense and energy? Could they see a silver lining in all of this?
They definitely could. With the current administration's focus on strengthening the U.S., we might see an increase in government contracts and spending in those sectors.
So that would be a boon for those companies operating in defense and energy.
Right, it would provide a bit of a cushion against those economic headwinds created by the tariffs.
So it's not a one-size-fits-all situation. Some will struggle, others will thrive. It's a mixed bag out there. But let's bring it back to the listener, to you. What does all this mean for your investments?
Yeah, that's the big question.
Should you be running for the hills, hitting that panic button?
Well, not necessarily,
Mhm.
but it's definitely time to be proactive and take a good look at your portfolio. Are you overexposed to any of those companies that are going to be hit hard by these tariffs?
Okay.
If so, maybe it's time to think about diversifying your holdings a bit.
So where should people be looking instead? What are some safer harbors in this, maybe stormy market?
Well, defensive stocks are always a good option when things are a bit uncertain.
Right.
Think of things like consumer staples, those companies we talked about earlier, Coca-Cola, Johnson & Johnson, Procter& Gamble.
Okay.
No matter what's happening in the economy, people still need their toothpaste, their soda, all those everyday essentials, right?
Yeah, that makes sense. Utilities also seem like a pretty safe bet, don't they?
Absolutely. Utilities provide essential services, electricity, gas, water. They're not super exciting, but they are incredibly stable.
So for the more risk-averse investor, there are definitely some options out there to weather this potential storm. But what about those who have a little more appetite for risk, those who are looking for potential upside in this whole tariff situation? Any suggestions for them?
Well, gold has traditionally been seen as a safe haven asset,
Hmm.
especially during times of economic or political upheaval.
Right.
And as we mentioned earlier, certain tech companies, especially those focused on AI and data analysis, could actually see some gains in this kind of environment.
Okay, so we've got a range of options from the super safe to the a bit more adventurous. But it's important to remember that this is not about trying to, you know, perfectly time the market or predict the future, right?
Exactly. No one has a crystal ball, and try to predict the market is, well, a fool's errand. It's more about having a well-thought-out investment strategy, one that's aligned with your goals, your risk tolerance, and how long you plan to invest.
So don't panic, don't make any hasty decisions, and remember, investing is a marathon, not a sprint.
Couldn't have said it better myself. Stay informed, stay engaged, and keep your eyes on the prize.
So far, we've explored those potential market downsides triggered by these tariffs. We've looked at the global implications of this whole economic chess game, and we've highlighted those potential losers and those surprising winners in this evolving landscape.
Right, it's a very dynamic situation.
But there's one more crucial piece of the puzzle we need to address the individual investor. What can they do? What practical steps can they take to navigate this uncertain terrain?
That's a great question, and it's one we're going to tackle head on in the next part of our deep dive. We'll explore some actionable strategies that you can use to not only protect your portfolio, but potentially even capitalize on some of the unique opportunities that are emerging in this shifting economic landscape.
Sounds like a plan. We'll be back in a flash to give you the knowledge and tools you need to make those smart decisions. So stay tuned. All right, we're back and ready to roll up our sleeves and figure out what you can actually DO with all this information about tariffs and the stock market. You know what they say, knowledge is power.
That's right.
So, expert speaker, what actionable advice do you have for our listeners who are trying to, navigate these maybe choppy waters?
Well, I think a good place to start is with a little portfolio checkup.
Okay.
Take a look at your investments and ask yourself, am I too exposed to those industries that are going to be hit the hardest by these tariffs? We talked about some of them earlier.
Right.
Automakers, tech companies relying on those global supply chains,
Yeah.
retailers who are facing rising costs, and potentially those shrinking consumer wallets.
So if you've got a lot of stock in those companies, maybe it's time to shake things up a bit.
Exactly. Diversification is your friend here.
Okay.
Think about shifting some of those investments towards sectors that are less likely to be caught in the crossfire.
Okay, so maybe towards those domestic manufacturers or those defense and energy stocks we were talking about before.
Right, or even those tech companies that can help businesses navigate this, this complex environment.
Got it. Diversification is key. But let's say you're feeling a little more cautious, a little more risk averse. Are there any specific types of investments that are considered like, safe havens during these times of economic uncertainty?
Yeah, it's kind of like Think of it as seeking shelter during a storm, right?
Right.
Some of those classic options come to mind. Consumer staples, for example.
Yeah, those are the companies that provide those essential goods, right? That people rely on day in and day out.
Exactly. Think Coca-Cola, Procter& Gamble, Johnson& Johnson.
Right. No matter what's happening in the world, people still need their toothpaste, their snacks, their everyday necessities.
Precisely.
Those definitely seem like pretty stable bets. What about utilities? Those seem pretty rock solid too.
Utilities, definitely. They're like those steady eddies of the investment world.
I like that.
They provide those essential services. Electricity, gas, water. The things people simply cannot live without. This makes them a lot less susceptible to the ups and downs of the market.
Okay. So we've got some solid low-risk options on the table, but what about those investors who have a bit of an adventurous streak?
Yeah.
Those who are looking for potential upside amidst all this tariff talk. Any exciting opportunities out there for them?
For those with a higher risk tolerance, gold often glitters brighter during those times of economic uncertainty. It's like the go-to safe haven asset. And remember, we touched on those tech companies, particularly those focused on AI and data analysis. Those could actually thrive in this environment, helping businesses make sense of all the complexity and manage the risks.
So we've got a spectrum of options here from playing it safe to, taking a calculated risk.
Yeah.
But expert speaker, I think it's important to emphasize this isn't about trying to, outsmart the market or anything like that, right?
You hit the nail on the head. No one can predict the future with absolute certainty. It's much more about having a well-defined investment strategy, one that's aligned with your personal goals, your risk tolerance, and, of course, your time horizon.
So don't panic, don't make any impulsive moves, and remember, Rome wasn't built in a day, right?
Right.
Patience and a long-term perspective are key here.
Couldn't agree more. Stay informed, stay engaged, and don't lose sight of those financial goals. And as always, if you find yourself needing a compass in these waters, consulting a financial advisor can provide invaluable, personalized guidance.
Great advice. But before we wrap up this part, I'm curious about something. We've talked a lot about, the potential impact of tariffs on U.S. companies and investors.
Yeah.
But this is a global game, isn't it?
It is.
What about the ripple effects on economies and markets in other countries? How does this all play out on a global scale?
Yeah, the global implications are indeed significant. I mean, picture this, right? The U.S. imposes tariffs, then other countries retaliate with their own tariffs, and suddenly you've got this, tit-for-tat trade war brewing.
Yeah, things can escalate pretty quickly.
Exactly. And this can disrupt global supply chains, slow down economic growth worldwide, and create a whole lot of uncertainty for businesses and investors all around the globe.
And wouldn't that ultimately boomerang back and impact us here at home as well?
Absolutely. We can't just pull up the drawbridge and pretend what happens in the rest of the world doesn't affect us. A slowdown in global trade, for example, could reduce demand for U.S. exports.
Right.
Putting our own businesses in a bind and potentially even leading to job losses here at home.
So this isn't just about what's happening on Wall Street, it's about Main Street as well.
Exactly. It's about recognizing that we're all interconnected in this global marketplace. What happens in one corner of the world has repercussions everywhere. Okay, things are starting to feel a little heavy here. Any good news on the horizon? What about this talk of Bitcoin taking a dip? Some folks might see that as a buying opportunity.
Ah, Bitcoin. The ever unpredictable wild card.
Right.
It's true that some investors see Bitcoin as a hedge against that economic uncertainty, and a drop in price can be tempting, for sure.
Yeah.
But Bitcoin is notorious for its volatility. It's a highly speculative asset, and its price can swing wildly based on, news, sentiment, even a tweet from an influential figure.
So maybe not the safest bet for the average investor.
Probably not. Investing, especially in something as volatile as cryptocurrency, requires careful consideration and a thorough understanding of those risks involved.
Good point. Okay, so we've explored the potential downsides, the potential upsides, and even that wild card, Bitcoin. But I keep coming back to this Goldman Sachs prediction of a potential 5% drop in the S&P 500.
Yeah.
That's pretty significant, isn't it? It certainly gets your attention. But it's important to remember that those market predictions, even from, well-respected institutions like Goldman Sachs, they're not guarantees.
Right.
They're based on complex models and assumptions. And sometimes those models, they miss the mark.
So what's the average investor supposed to do? Just sit tight and wait to see what happens?
Well, not exactly.
Yeah.
Can't control those market whims, right? But what we can control is how we react. And I think this is the perfect time to revisit your investment strategy. Dust it off, make sure it still aligns with your risk tolerance and your long-term goals. Maybe it's time for a few tweaks here and there.
So don't hit the panic button, but don't get complacent either.
Right on. Stay informed, stay engaged, and be prepared to adapt as this whole situation unfolds. Remember, investing is a marathon, not a sprint. And just like in a marathon, it's crucial to pace yourself, stay hydrated, and keep your eyes on that finish line.
I love that analogy. So we've covered a lot of ground, from that global impact of these tariffs to the Bitcoin roller coaster ride, from the importance of a long-term perspective to the need for that well-defined strategy. Expert speaker, I'm curious, what are you personally watching most closely as this tariff situation unfolds? What's really piques your interest?
Fascinates me. It's how businesses are adapting and evolving in response to this new reality.
Hmm.
Are they finding creative ways to mitigate the impact of those tariffs? Are they restructuring those supply chains? Are they investing in new technologies to, gain a competitive edge? I think those micro-level adaptations, those are the things that will ultimately shape those long-term effects of these tariffs.
So it's not just about the big picture, it's about those individual stories of resilience and innovation and adaptability.
Exactly. And often it's during those challenging times that we see the most ingenious solutions emerge. That's what makes this whole situation so captivating to me.
It's a good reminder that there's always a human element to these economic stories. We can get caught up in the numbers and the forecasts and, all of that.
Yeah.
But it's the people and their ingenuity that truly drive change
Yeah.
and ultimately shape the future.
Absolutely. And who knows, maybe some of these hurdles, maybe they'll lead to some positive shifts in the long run. Perhaps we'll see this revival of domestic manufacturing or a renewed focus on those sustainable and ethical supply chains. Only time will tell.
That's a great point. Sometimes disruption can be a catalyst for progress. It
Yeah.
forces us to rethink our approach and come up with some new and improved solutions.
It's like that old saying, necessity is the mother of invention. And in this case, that need to grapple with those tariffs, well, it might just spark some incredible innovations that ultimately benefit us all.
I like that. Even in the face of uncertainty, there's always that glimmer of hope for a brighter future. But of course, we need to stay vigilant and informed along the way.
Absolutely. Burying our heads in the sand and hoping for the best isn't going to cut it. We need to stay engaged, stay informed, and be prepared to adjust course as needed.
Well said. So we've covered a lot of territory today, from that potential market downturn to the Bitcoin roller coaster ride, from the importance of that long-term perspective to the need for that well-defined strategy. But I think there's one more piece of this puzzle we need to examine.
Yep.
We've talked about how these tariffs might impact the stock market and the economy as a whole. But what about the individual investor? What practical steps can they take to navigate this uncharted territory?
That's the million-dollar question, and it's one that we're going to address head-on in the final part of our deep dive.
Okay.
We'll explore some actionable strategies that you can put into practice to not only protect your investments, but also potentially even benefit from the opportunities that emerge in this evolving landscape.
Sounds like a plan. We'll be right back to equip you with the knowledge and tools you need to make those informed decisions in our ever-changing world. We're back. And, we've talked a lot about the big picture impact of tariffs, but let's get down to brass tacks. What can you actually do to protect your investments in this environment? Expert speaker, where do we even begin?
Well, I always say a good starting point is understanding your own personal risk tolerance.
Okay, risk tolerance.
Right. Are you the kind of investor who's okay with a little bit of a roller coaster ride?
Mm-hmm.
Or do you prefer a more, slow and steady approach?
Right, makes sense. Know thyself. Really.
Exactly. So once you have a handle on your risk profile, you can start tailoring your investment strategy.
Okay, so let's say you've done some soul searching, figured out your risk tolerance. What are some concrete actions people can take?
All right. So for those who are a bit more risk averse, maybe looking for a bit more stability in these uncertain times, I always recommend revisiting those classic safe havens.
Oh, yeah, those safe havens.
Well, consumer staples, those companies that provide the essentials we all need.
Like those everyday things we can't live without.
Exactly. Think about companies like Coca-Cola, Procter & Gamble, Johnson & Johnson.
So we're talking about the stuff that's always in our pantries and medicine cabinets, no matter what's happening in the economy.
Exactly. Those companies tend to weather those economic storms pretty well.
What about utilities? Those always seem like a pretty solid bet, too.
Oh, absolutely.
Yeah.
Utilities are like the bedrock of the investment world.
Okay, so we've got those defensive plays covered. But what about the investors out there who, have a bit of an adventurous spirit? The ones who aren't afraid to take a little bit of risk to potentially see those higher returns. What about them?
Well, I think for those investors, this tariff situation actually presents some pretty unique opportunities.
Really? Opportunities? How so?
Think about it. As global supply chains get disrupted, there's a chance to find those companies that are, maybe a little bit under the radar, but are positioned to really benefit.
So you're talking about those diamonds in the rough, the companies that might be overlooked because, well, they're not the big flashy names everyone's talking about.
Right. It takes a little bit of digging, a little bit of research. Look for companies that are coming up with those innovative solutions to those supply chain problems, or maybe companies that are shifting their production to take advantage of these new opportunities.
So it's all about being adaptable, thinking ahead, maybe even challenging those old ways of thinking about investing.
You got it. This isn't a static situation. Things are changing all the time. So it's important to stay informed, stay flexible, and don't be afraid to, adjust your strategy as needed.
You've got to, ride the wave, adjust your balance to stay on top. It's like surfing.
I like that analogy. And of course, never forget the importance of diversification.
Right, diversification. Don't put all your eggs in one basket.
Exactly. No matter how much risk you're comfortable with, spreading your investments across different sectors and asset classes, it can really help you cushion those potential losses and, smooth out the bumps along the way.
So we've covered a lot of ground, but if there's one key takeaway you want our listeners to remember, what would it be?
Honestly, stay calm, stay informed, and don't let those emotions, that fear, drive your decisions. Remember, market fluctuations, ups and downs, they're a normal part of investing. The most important thing is to have a clear strategy, one that aligns with your goals, your risk tolerance, and your time horizon.
So it's about taking that long view, not getting too caught up in the day-to-day noise. And remember, if it all feels a bit overwhelming, there's no shame in reaching out to a financial advisor for some personalized guidance.
Exactly. It's like, having a map and compass and a trusted guide to help you navigate those twists and turns along the way.
Love that. Well, I think we've covered a lot of ground in this deep dive. We've explored how tariffs might impact the market, the global trade picture, and most importantly, we've given you some practical steps you can take to not only protect your investments, but also potentially benefit from the opportunities that come along with change.
It's been a great conversation, and I hope our listeners feel empowered to make those smart, informed decisions as they navigate this ever-changing world of investing.
Absolutely. So stay curious, keep those deep dive requests coming, and until next time, happy investing, everyone.